In less than 2 years, the ARK token went down by more than 90%. But after that crash, it also went up quite nicely. Within 6 months, more than 400%. Now a chart like this screams for market timing. You don't just want to buy and hold ARK, you want to trade those waves. But we don't just want to randomly guess, right? We want to use numbers, we want to use statistics, we want to use simulations of buying and selling the ARK token. I do this all the time on this channel. I determine, based on the past, what's the best moving average to get those ups and downs. For example, here, what we've got on this chart is the 200-day moving average. So we would be betting on falling prices when the price is below, and we would be betting on rising prices when the price is above that moving average. But 200 is pretty arbitrary, right? Why take 200 days? Why not take, for example, 150 days? Or why not take 100 days? What's the best, at least historically speaking? So I looked out for all the data I could find. This macro Excel sheet starts in 2017, March of 2017, all the way to today. And I have calculated the daily moving averages, the simple moving average and the exponential moving average. And I've simulated, had we followed that trend following strategy, how well would we have done depending on the different moving average durations. Buying and holding the ARK token would have given us annualized minus 12%. And in that trading strategy, we do have trading fees in here. I simply said 0.2% for every buy and sell order. We do both. We bet on rising prices when we are above, so we buy over here, but we also bet on falling prices when we are below. So we are shorting the token whenever we are below. So what moving average historically gave us the best signals? Have a look at this representation of the same data. So here on the x-axis, the moving average duration, on the y-axis, the annualized performance. In turquoise are the simple moving average results, and in red are the exponential moving average results. And so to keep this very short, the best EMA is over here. It's the 71 day, which would have given us 128.9% per annum. And the best SMA is here, the 51 day. Now, what I find interesting around those results, and this is pretty typical for a lot of cryptocurrencies, is that in general, this approach tends to work. In general, following the trend tends to perform better than just buying and holding. Buying and holding here for reference is in black. So that black line, now we can see that the back-tested results, even after fees, they tend to be above that black line. The only moving average durations that perform worse are the ones below 20, 25 day. And that's simply because then the price moves above and below those moving averages too often, generating so many failed signals, generating so many costs that it's not worth it anymore. And the trends they establish over a longer period of time. So once you get above that threshold, the 30-day roughly, then you tend to outperform buying and holding. It's not even that important what moving average one takes. Now let's look at this best EMA, the 71 day. So again, here we are with the price, and we don't look at the simple, but at the exponential moving average, because that has been the best. We double click on the line and we set the duration to 71 days. We click OK. We make sure that we've got the days selected here in trading view. And this tells us how ARK trading would have worked the best. Now we do have our failed signals, right? For example, over here, we would be buying high just in order to then sell low again. But that's the reason why we make these back tests, right? We make them in order to determine what historically was the best. And so with this current rally, we would have to become careful once we fall again below 51.8 cents roughly. Now this is going up all the time, so this has to be updated. We would still be bullish even if we dropped 50% roughly, simply because we went up so quickly. Now let's have a look at how this developed over time, trading according to that 71-day moving average. This is here on a linear scale. So we're starting with $1,000, which would have turned out to become 140,000. Here's the same on a logarithmic scale. So again, in white is the price of the ARK token, and in red is the back-tested result. A very nice constant performance. These two graphs here are the same. The only difference is the scale, right? This is a linear scale. This is logarithmic. So here we've got a 10x with each of those changes. So yes, we are cherry picking the results to a degree. We are taking the very best of the back tests. But as said, this strategy tends to work for most cryptocurrencies and for most moving average durations. Same here. As long as we are above 30 days, we tend to outperform buying and holding, even considering 0.2% fees. And since we do both here, right, we bet on rising prices and then switch to betting on falling prices, we actually have with each of those switches 0.4% in fees, because we are closing the long and then we are opening the short position. Now this video is simply just on trading the token. I have made a dedicated video though on the fundamentals as well. The title of that video is The ARK Token When $10. Feel free to simply just click on this channel. In the video history, it's just been released recently. If you want to get your token back tested, feel free to check out the premium membership. Link is down below. And there's also a free Telegram channel, link as well down below.